The text messaging part of Grower's Edge is very handy because every day I'll receive a text that shows me where the best local market is.
That's what I like about Grower's Edge too. It gives me the information I want on my smartphone so that if I'm not in the office, I still get the information that I need.
Good afternoon, welcome to GrainTV. It's August 16th, 2013. I'm Logan Burgess. Joining me to my right here is Cody Bills to help break down the action that we saw this week in the grain complex. Let's jump into Fire Tip and see how the grains closed today on Friday. As you can see, we had new crop corn down 8 3/4. New crop beans was down 6 1/4. Wheat had a relatively weak day as well, off 6 1/2 in Chicago. Kansas City wheat down 4 3/4. Cody, we did have some export sales reported this morning for soybeans. Certainly didn't seem to help out the action, though. What was kind of your take on what we saw today to wrap up the week?
Well, yesterday we saw pretty good gains here for corn and for soybeans. And I think one of the reasons why we didn't continue that is just it's a Friday. We're going into the weekends. Some of those gains come off the table here as people wrap up some of the positions that they had. I think, it'd be difficult, too, because we had pretty strong resistance levels for corn and for soybeans. Yeah. If you take a look here at the daily candlestick chart of this November contract, each bar represents 1 day worth of price activity. So that red bar on the far right represents today's activity. One thing you'll notice is that the wick on this bar, which represents the range that that we traded today, you'll notice that that went up to about 1269. This is a 200-day moving average, this kind of purple line here. And you also have a trend line going from the highs of June and then the highs of July right down here. And it's right around that 1270, 1273 area. And I think that's offering up pretty significant resistance here. I wouldn't be surprised in the coming weeks to actually see us consolidate around this area. I think there's more risk to come down the pipe, and I think that the report that we saw on Monday was fundamentally bullish enough. I wouldn't be surprised if we hang out right around this area, kind of put in a base before we potentially move higher. Yeah, let's take a look here at corn on the new crop as well. Similar story here is looking at this chart. Each one of these bars here represents a day. This is a candlestick chart, and if you guys want to chart this for yourself, visit us over at grainhedge.com. You can take a demo of the platform that you see here on GrainTV. But as you said, Cody, we did highlight some key levels here to watch. We have some Bollinger Bands on this chart, and you can see we have a moving average that we traded down through today. But we do have the bottom side of this recent trend here sitting on the corn market, and we were able to trade up through that today, but we found some selling pressure there. I guess I kind of agree with you here looking at corn. Kind of a similar story on soybeans. That we may be putting in a little bit of a near-term bottom here because I think moving forward there's going to be some more risk added to this market. We're going to get into that in depth here in just a moment. But bottom line, I guess, any gains that we do see on the corn market, I see that as a good opportunity to make some sales because I do think that corn was different on Monday than soybeans. In terms of the ending stock revisions, corn wasn't quite as bullish as soybeans certainly. So I think we might see a little bit of a rally, and I think what you captured well was a rally in a more long-term bear market. So bottom line, might prove some opportunities to get caught up on sales here in the next couple weeks. One big thing, though, that's going to be driving price action is the condition of this crop over the next couple weeks and the worry of a frost freeze concern. We've been talking about it a little bit here on GrainTV. And to that effect, we had Planalytics release a report today. Cody, you dug into those numbers. What were some of the key takeaways from that? Yeah, Planalytics actually releases a yield report, and they base their yield forecast on the greenness throughout the U.S. They basically take the NDVI index, and they have about 20 years worth of history of that NDVI index, and they put that into a model, and they forecast they forecast yield for corn and for soybeans. One thing that you're going to want to keep an eye out is actually we had this report come out. They didn't revise it from their previous report. They are right now currently almost exactly where the USDA is in terms of their yield forecast. And I think that's pretty incredible. What that means is that the revision that we saw on Monday from the USDA brought them down in line with Planalytics, something that Planalytics had been talking about for a month now. So it's a very powerful report, and all of our traders and clients do get access to it. There are a few big takeaways here when we're moving forward. One is that we're going to have very good growing conditions, very good growing temperatures, highs of around high 80s, low 90s When you look at the precipitation, though, we're not going to have nearly as much. What that means is it's most likely going to speed up the grain filling period, and that's going to have yield drag effects. I think the problem here is that we have this, we have a drier climate. There's less of an opportunity that we have kind of a 2009 finish to this growing season where we had record yields. I think it's more likely that we're going to start to see yield drag and potentially some crop condition revisions lower here in the coming weeks. One thing, though, to keep in mind is that when you have that revision, when you have that speeding up of the grain filling period, we do start to lose some of the risk of that frost freeze threat. So some of that frost freeze threat risk may be coming off the table, but we're also having a little bit of a yield drag from the speeding up of the grain filling period.
You know, bottom line here as a producer moving forward, are you kind of in agreement with my discussion on corn there a moment ago in light of this fundamentals in terms of production?
Yeah, I think the big thing here is that it's kind of, you have two negative effects here. One is you're having a speeding up of the grain filling period, which is going to have yield drag, but you still have that frost freeze threat on the table. Both of those is risk, and I wouldn't be surprised as we move toward that frost freeze risk that we continue to have at least a little bit of a premium. And I don't think that gives you, I don't think that gives enough reason to just continue selling this market. I think it gives a reason to move sideways and consolidate, and then potentially out of that consolidation, if we get a frost freeze event, then we start to explode one way or another. But bottom line here is I do think that the bottom at least is put in for the near term.
Okay, we'll have to see what comes down the pipe the next couple weeks here. You know, as we know, on Fridays here on GrainTV, we kind of wrap up the action that we saw in the cash market. And let's jump into those tables there and see how we saw spot basis change this week for corn and soybeans. Here, if we start with corn first, you can see that we were up 2 cents on average across the nation this week. We did see the Gulf basis improve pretty good this week, but kind of limiting the gains that we saw more inland was barge rates, which did increase. That really worked to kind of limit any gains that we saw along the river system here this week. Ethanol continued to be strong, up 2 cents on the week here, and that's really to be expected at this time of year. We've seen 2 weeks of very strong crush margin for ethanol facilities. Right now it's sitting about $2.30 per bushel in the state of Iowa. So there's a lot of incentive for these ethanol producers to be crushing corn right now, and we see that getting passed along to the producer a little bit here just in the last couple weeks. Turning our attention here to soybeans, a relatively similar story. On average, we saw soybean basis up 8 cents here just over the last week. Different story, though, in terms of what we saw out of the Gulf. We saw Gulf basis weaken, and that weaker Gulf basis combined with strengthening barge rates really did not help the river system here. You can see the red highlighted along the major rivers here north of Cairo, Illinois. If we look at crush facilities, on average, we saw crushers weaken, but it was exceptionally volatile for what we saw over the last week. As you can see, out in the far western Corn Belt, western Iowa into Nebraska, we saw some pretty good gains, and some of those crush facilities actually strengthened basis by about 20 cents. So as I said, it was exceptionally volatile, but that could provide some good marketing opportunities here for guys still holding on to old crop soybeans. So keep that in the back of your mind here moving forward. In general, though, we saw another volatile week here for the grain market, both futures and cash, it seemed like. We'll be back to break down on Monday. Thanks a lot for joining us here on GrainTV.